Good afternoon, I'm Jonathan Shine, practice leader at National Real Estate Investor, and we're at the 2012 Recon Convention in Las Vegas. And today our guest is Adam Ifshin, CEO of DLC Management. Adam, thank you.
Thank you for having me.
Well, how has DLC Management survived the Great Recession?
The answer to that question is that what we have focused on, in addition to working our properties hard every day, is what we've done is we've worked on building the human capital of the organization. Okay. And it's really, you survive hard times by having great people, great culture, and great commitment. Okay. And that's really the core tenet of how we've done it. You can't keep your assets leased, you can't keep them up to date, you can't develop new things through a tough time, you can't redevelop assets unless you have great people.
So what you're saying is in your repositioning is how you've repositioned yourself by adding people during this downturn.
We have actually net added people in the downturn, and we've taken the opportunity in many instances to be able to get people of a caliber that prior to 07 we simply couldn't access. And we've taken advantage of that.
That's a great opportunity when, everybody knows that it's been a very difficult time, and you've actually taken an opportunistic look from the people point of view versus the real estate point of view.
And we've done it across a broad spectrum of roles. So we've done it everywhere from finance accounting to marketing to leasing in particular to development. And it hasn't only been going out and getting experienced people. Last year in this country, only 35% of all college graduates had a job upon graduation. And one of the things we found is we've been able to get new college graduates to come to work for us who in the past, they were looking to go on Wall Street, they were looking to go into an investment bank or a commercial bank, maybe they were going into tech. Now, really, really talented young people are available to us, and we're moving to take advantage of that.
That's an amazing story. So in that, have you also been a net buyer or a net seller during this period?
During this period of time, we have sold more than we've bought, but we've sold very, very selectively those things where, in actuality, cap rates never backed up, and in some cases compressed.
Okay.
So, for example, we were able to sell an asset last year that we bought, believe it or not, in 2007 for a $2 million profit or a 20% move in value. We leased that asset up through the recession, and then we were able to exit it at a mid-6 cap rate because of the quality of the asset that we had created.
So with that in mind, what are the different parts of the country that are rebounding? Was it in one of those areas that was rebounding?
It actually was in a great sub-market in Atlanta, which is a market that I don't believe yet has really started to rebound.
Okay.
But in this particular instance, it was in Buckhead, and it was irreplaceable real estate. There is no question there are winners and losers geographically in this Great Recession, and there are places you can look to where it doesn't look like the recession has ended, and in fact it hasn't, and there are places you can look to like it looks like the recession never occurred. So some of those places, the Northeast held up far better than the rest of our portfolio across the country, and it has rebounded faster and has seen less erosion in rent. Conversely, certain markets in the Midwest, as you might imagine, have suffered very, very badly. But most of all, it was those path of growth markets where there was extraordinary building, extraordinary explosion of GLA per capita, where rent has rolled down the furthest, and both rent and absorption have been the slowest to come off of the bottom.
Okay, being that your portfolio is mostly shopping centers, what retailers or categories of retail do you see succeeding in this new economic environment? This new economic environment.
The consumer wants value.
Okay.
The consumer wants value, and the consumer wants value. So the retailers who came back first with an open to buy were those retailers who were focused on value proposition to their customer. So that's people like TJ Maxx, Marshalls, Ross Dress for Less, Dollar Tree, Dollar General, Family Dollar, Target, Walmart. And the grocers who were focused on value. When you think of anchor tenants in our portfolio who not only never stopped opening stores, but have accelerated opening stores as we've come out of this. And if you look at those retailers, you see their same-store comps every month are amongst the strongest in the industry.
Wow. Now, speaking of this particular Recon 2012, what is your sense of the show this year? What are you seeing? Do you have any news that you could tell us about today?
We have been, first of all, coming in, we knew it was going to be better than last year. Number of appointments, caliber of appointments, tenants saying they were coming to talk about a specific deal or wanted to do a portfolio has been coming off the bottom from 09, but now in 2012, for the first time, it really feels more like 04, 05 than it felt like 09. It's not overly aggressive, but what we're seeing is the lack of new development is driving those tenants with an open to buy to seek quality, well-capitalized firms that specialize in redevelopment and repositioning, because they have faith that they can come into one of our second-generation spaces and make it work. So, for example, several months ago, we signed a lease to have the first Walmart market, the freestanding grocery store concept in Atlanta.
Really?
We're backfilling a former Publix where we terminated, we terminated and recaptured Publix's lease. That store, Walmart told us yesterday, is going to open on June 25th. It's going to be the very first one in Atlanta. And we're already working on 3 additional Walmart market deals with them across our portfolio in the East Coast. There's one other thing we're doing, and in the 20 years I've been coming to Recon, it's the first time it's ever happened.
First time.
But I'm going from, we've made deals with tenants before, and you can say, what does it mean to make a deal? Shake hands, agree on an LOI, resolve the last lease issues, call the lawyers back wherever and say, finish the lease and get it out for signature. But for the first time ever in my career, 21 years since I started DLC, we're actually going to sign a lease in our booth with a tenant, and I'm leaving here with you now to go back to my booth to meet the CFO of Half Price Books, and we're going to sign a lease together.
Sign a lease together. Well, that's a great way to finish this interview, and it's a great vote of confidence for Recon 2012. I want to thank Adam Ifshin, CEO of DLC Management, for spending some time with us. Adam, thank you.
And thank you, Jonathan.